Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Matterport reported earnings last week, and the market didn't have a great reaction. The stock was down. I think investors were really focused on the guidance number and the growth number, but there is slow and steady improvement at Matterport. So I want to go through the results, what the trends are, and what to look for going forward. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing, in the show notes. I'm going to start with the press release from Matterport. This is the high-level results. You can see $39.6 million in revenue, up 37% from a year ago. Subscription revenue reached a new record of $20.9 million at the high end of their range, and non-GAAP loss was 7 cents per share. I'll go through some of these numbers, but you can see that there is steady growth. Total subscribers increased 34% year over year to 827,000. Services revenue was up nicely. That's not quite the high margin business that subscriptions are, but again, I'll cover that in a second. There were also a number of products introduced. Genesis is one that I have covered in a previous video, but a really interesting use case of artificial intelligence in Matterport's business. Basically, being able to take a Matterport of a space and then say, hey, how many cubicles can I fit in here? How many workout machines could I fit? If you've ever gone through the process of renting a commercial space and actually trying to figure out what the layout would look like, that is often something you spend thousands of dollars on working with an architect. That can actually be done really quickly with Matterport and artificial intelligence. So I think a really compelling use case. There were a number of pricing changes. AWS's IoT Twin Maker is now an integration. So steady progress on the technology front and getting some of Matterport's products commercialized. This slide visualizes some of this information really nicely. Spaces under management is something that Matterport always goes through. I'm not sure it's the best judge of the company's value creation, but subscribers definitely is. So here's the number of subscribers, and then the number of paid subscribers is this red line. This is subscription revenue over time. Like I said, this is the highest margin piece of revenue, so $20.9 million, and just slow and steady growth over time. You would like to see this be higher growth, but hasn't quite been the case. So slow and steady growth, better than nothing, absolutely. So why is growth up so much? Well, this is a big reason. Services revenue, which is also this line item right here, $5 million a year ago, $10.7 million in the most recent quarter. This is basically Matterport working with customers, offering some of their technology as a service so you don't actually have to do it yourself. Should help drive subscription revenue long term, but it is a moneymaker in the meantime. The difference between the two segments is services revenue, 26% gross margin, and subscription revenue is a 75% gross margin. So not nearly as profitable on the services business, but if that continues to grow at a really solid growth rate, it is going to be very helpful for the business. Operating expenses also came down. I'm going to cover some of the stock-based compensation and how much that plays into this, but from a cost perspective, Matterport is really starting to improve. So you kind of have improvement on both sides. Your revenue and gross margin is improving, and then also operating costs are coming down. So that gets you that step a little bit closer to profitability. I'll go up here to the non-GAAP loss per share, and you can see that there is a steady improvement. Management said that next year is when they can start thinking about being break even, at least on some of the metrics like cash flow or EBITDA. This is always something I go back to with Matterport. Very good balance sheet. So the business is growing. They are burning cash and losing money, but they have a very long runway because there's $446 million in cash and investments and no debt. So cash used from operations last quarter was $12.4 million. On an annualized basis, that's about $50 million. Given that cash balance, that's 9 years of runway. That's a very long runway for a company that continues to grow and develop its technology. So the balance sheet is a point of strength. You have to see that operational improvement take place over time, but we are slowly seeing that. So it's kind of slow and steady progress. It's just not the kind of progress the market was looking for. Before I get to guidance, I want to talk about the cash flow statement. This is the 6-month cash flow statement. So not just the last quarter, but this is what they reported on the earnings release. You can see that cash used from operations was $32.8 million, down from $58.3 million a year ago. That's really positive. Here's the big number, and this is why losses are bigger than things like non-GAAP losses or cash, because $63.3 million in stock-based compensation was given out in the first 6 months of 2023. So this is things like restricted stock units, stock options. Obviously, this is a big piece of pay that Matterport is using for employees. It is a non-cash payment, so it comes out of the operating cash flow, but it is a real cost. Like if the stock went up, it would be more dilutive for shareholders. So something to keep in mind that this is not a cash cost, but it is ultimately a cost for investors. But again, from an overall standpoint, cash burn is getting a little bit better. So that's a positive step in the right direction. On to the guidance numbers. This is what the market was a little bit disappointed in. For the next quarter, revenue expected to be $38 to $40 million, growth of just 0% to 5% from a year ago. Subscription revenue, $21.8 to $22 million. That was $20.9 million in the second quarter. So a little bit of growth, but not a whole lot of growth. 15% to 16% growth year over year. And then the non-GAAP loss per share, 5 cents to 7 cents. So again, improving on the bottom line, but not improving as quickly as the market had hoped. This was kind of a mixed bag for Matterport, and I think that's what we saw with the market's reaction. Growth, again, wasn't quite as impressive as you would like to see for a company like this and technology, but it seems like there are products that are being built that could really catch on. I think the AWS partnership and the capabilities that are added to TwinMaker, the way that Matterport is integrating with Autodesk, the artificial intelligence tools, these are all things that could really catch on in a big way in the future, but we haven't seen that growth yet. What we have seen is the slow but steady growth in subscription revenue and services revenue. Those are really positive signs. And the closer that Matterport gets to cash flow break even, the better it is for the company. I still have a lot of questions about how to value Matterport and what the growth trajectory is long term. But if you're a long-term shareholder, I think this is a really intriguing company simply because it's a growth company that has a phenomenal balance sheet and a long runway to execute its long-term plans. Whether or not it can do that, we don't quite know that yet. But at least that risk reward is there where the upside could be really high if some of these products take off and get integrated into some of the services like construction, like hotels, like home rentals. I own the stock. It's ultimately a business I'm really intrigued by, but still a lot of questions. And that's what investors are thinking a lot about right now. But what do you think about the results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.